Hello, my name is Mark Workmeister. I'm the managing partner with Professional Financial Advisors, and we're going to take just a couple minutes here to go over some of the high-level things that have happened to kick off August 2024. We've seen a lot of volatility to kick off the month. We had poor economic numbers the first week, and then we had the Japan carry trade, which happened over the weekend. And then, we saw the VIX, which is the CBOE Volatility Index. It actually spiked over 60, which is the first time that's happened since March of 2020, which was right going into COVID. So there's been a lot of things happen in a short time period here that has indicated that maybe there's more things to come. And really, that's what people fear, is not so much what happened yesterday, but what's going to come down the road. So one of the things we wanted to focus on was just the long-term focus on the market. Most people, at least to watch this video that we're working with, they're not swing traders, they're not day traders, they're long-term investors. They own stocks and retirement accounts and things like that. And so if you look back just over a couple time periods here, you'll see that the market since the beginning of 2022 is a really bad year. Fed took up interest rates really quickly. We're up 8.4% since then. If you look back to just right before COVID, January 2020, we went through two big drawdowns in 2020 and 2022. We're still up 50%. And then 19, we had three really good run-ups, as you can see in early 19, then coming back off COVID, then coming back off 22, and you're up over 100% just since the beginning of 19. So it's always good to focus on the long term anytime you see these short-term spikes in volatility. One thing we look at as far as recession numbers going forward is the Sahm Rule recession indicator, which is named after Claudia Sahm, who's a former Fed economist. And what it looks at is the 3-month average of unemployment rates, and then it compares it to all unemployment rates over the last year. So what it's really doing is looking to see if there's a spike in unemployment on average over the last 3 months compared to the last year overall. And anytime that has spiked, it has really raised the odds of there being a recession, and that recently did happen in July 24. So unemployment has started to go up compared to where the average was. So recession fears, volatility, the Japan carry trade, all that stuff's going on. But all that to say is stock market pullbacks like we've seen are completely normal. This is only the second time all year we've had a 5% pullback. We only had 3 of them all of last year. But you go back year before that, we had 12 pullbacks of 5% or more. And you see this chart, it's showing how many times did the market drop 5% in a given year. And you see all these different, so we're basically normal right now. The average is 4.6. So on average, 4 times a year, you're going to see a 5% pullback. This was our second one. So it doesn't mean anything good or bad going forward. It's just talking about the pullback itself in the markets was relatively normal. That's all we have for today. There's been a lot going on. There's more to come. There's political issues, and we'll try and keep you up to date at least once a month. If you have any questions, please reach out to myself or Mark Mayfield, and I hope you have a great rest of your day.